consultant with the Mortgage Group's Vancouver office. I arrange mortgages for my clients, and often the tail end of the process involves the question of mortgage insurance. Now, some clients end up accepting mortgage insurance that our lender partners offer, while others accept a policy that maybe one of our mortgage insurance partners offers, kind of somewhat of a third-party organization, but still mortgage insurance by definition. There's another group of mortgage borrowers that waive all insurance provided by any carrier or put off the issue to the future. And finally, another group that pursues independent insurance from an independent life insurance provider, like who my guest is today. So today I've got Mark Huber on the line. He's a financial planner, someone I've come to know and trust and respect over the years, and I'm really happy he's here today. So we're going to talk about mortgage insurance, life insurance, and I just wanted to start things off with a little kind of story. So a couple that I recently met with and placed a mortgage for certainly asked me about mortgage insurance, because it's one of the things that we as mortgage brokers are kind of responsible for at least bringing up. They already had mortgage insurance through their existing lender, but wondered if they could do better. So to find out the answer, I, of course, contacted my go-to person, Mark Huber, and was surprised to learn that if they continued on with their current insurance provider, which was their lender, at $155 a month for a $390,000 kind of mortgage insurance coverage, they'd end up paying a total of, well, it was just over $37,000 in insurance premiums over the next 20 years, because they had a 20-year amortization period. I was even more shocked to learn that for the same $390,000 of insurance coverage elsewhere, and elsewhere being independent kind of life insurance known as term insurance, and term 10 is this example, their premiums could drop to $41.35 a month, and that's, of course, from $155 a month, giving them, of course, immediate savings of over $7,500 over the same 20-year period. Now, what I didn't know, that was a fairly new lesson to me, is that for the same $390,000 of insurance coverage elsewhere, and this now is called Term 20, they could chop their premiums to $65.92 a month, giving them savings of $22,000, in fact, over $22,000 over the same 20-year period. So obviously, no question to ask kind of what do you think they did. They didn't go for the insurance provided to them by the bank. They went with independent insurance. So in any event, that's kind of been the initiator for this call, and why I thought it would be interesting and kind of helpful to share some of this information with mortgage borrowers. So I convinced Mark to agree to this call and share with us his mortgage insurance, I'm going to call it mortgage insurance investigation of this couple and what it means to you and how you can benefit from it. So, Mark, welcome to the call today.
Well, thanks, Monique, for the time and for giving me the opportunity and the platform. It's my pleasure.
Okay. My pleasure to have you. Now, Mark, why don't we just kind of cut to the chase here and just dive in with the topic, if that's okay?
Okay, Monique, that sounds great. I'm sure all the listeners on the call would remember the day just as if it was yesterday. You're sitting in your bank manager's office. Your heart is racing, your palms are clammy, and you're about to sign off on paperwork that would essentially formally make you indentured to the bank for what seems the rest of your life by taking on the largest debt you will ever have in your adult life, which is the mortgage. So everything, of course, seemed to be moving in slow motion. You remembered that you and the banker covered off things like the type of mortgage and its terms and conditions, and the amount of the total cost of all of it, and you felt as if you were just about to commit the modern version of Harry Carey. You just turned to your spouse and got the "it's okay, dear" look. So you picked up the pen, but just before you began initialing and writing down your name, the banker asked, of course, you could be wanting mortgage insurance with that white, right? And you asked, what? Your mouth felt full of cotton. Mortgage insurance, and of course everyone panics. What do you mean? What does it do? How much is it going to cost me? And a host of other questions swirled through your head. Well, after it was all over, your wallet was lighter by another $50 or more a month, certainly more. You still weren't sure what you had or why you had it, but your spouse and your banker seemed pleased, so you guessed that it must have been right. Of course, as the years roll by, you come to understand the benefits of mortgage insurance. However, thoughts still nag you at the same time. You wondered if you could have done perhaps some preliminary research and shopped around whether you could have done better. And I'm sure this sounds familiar to all the listeners.
Yes, one thing I've certainly learned is that the whole issue of mortgage insurance and insurance in general, as it relates to you kind of covering off liabilities that you have and taking care of others in your life, should something happen to you, it should be kind of another piece of your financial plan, shouldn't it?
Well, yes, Monique, you're so right. And unfortunately, it's typically purchased as a knee-jerk response to the questions that comes right out of the blue. I mean, who is not going to say yes when asked, would you like to have your house paid off if you die? The problem is that coupled with the emotional response, most consumers do not really realize that they have any options available to them and have not taken the time to do any price shopping.